Welcome back to LizBiz Academy. All right, let's jump right into this because today we are tackling Lesson 6 of our Payroll Magic Series. This explainer right here, it's basically your ultimate guide to that one mandatory payroll step that catches, honestly, almost every new boss completely off guard. If you're making that jump from a solo operator to a growing business owner, this is the exact operational hurdle you've got to clear with total confidence.
So you've secured your state tax identification numbers and your business infrastructure feels, well, pretty complete. You're probably sitting there thinking you are totally clear to process payments to your team. But are you sure? Because if you skip this next operational step, your state government can and usually will slap you with severe, compounding daily fines that'll literally drain your operating capital overnight.
To get you fully prepared today, we're going to cover 4 main things. Number 1, the mandatory legal shield. Number 2, state headcount triggers explained. 3, avoiding the audit trap. And finally, number 4, pay-as-you-go automation integration. Let's get into it.
Starting off with Section 1, the mandatory legal shield.
Okay, let's instantly dispel a huge rookie mistake right out of the gate. Workers' compensation insurance is not some optional employee benefit. It's definitely not a luxury corporate perk you just add on later when you're feeling generous, you know? It is a strict, state-mandated statutory requirement. Almost every single state forces you to activate this policy the exact second you transition from a solo operator to a boss.
And the reason this mandate exists is because a proper workers' comp policy acts like a dual-sided shield. It covers medical treatments, rehabilitation costs, and lost wages for any team member who gets hurt or falls ill while doing their job. So it protects your worker by making sure they're cared for, and it protects your business from catastrophic out-of-pocket medical expenses. It's a win-win, really.
Moving right along to Section 2, State Headcount Triggers Explained.
So understanding your headcount trigger map is absolutely critical. The specific rules for when you actually have to activate your policy vary wildly depending on your local state guidelines. In what we call moderate states, the mandate might only lock in once your headcount hits 3, 4, or maybe 5 active workers. But listen, guessing which category your state falls into, that is an absolutely unacceptable risk for a business owner.
Why? Because in several strict states, the law mandates that you carry a workers' comp policy the second you hire your very first employee. Yep, just one. And yes, that applies even if that one person is literally just a part-time assistant working a couple hours a week. The absolute moment you hire employee number 1, you are legally forced to buy a policy.
So the crucial question is, what happens if you guess wrong? Well, if an on-the-job injury happens and you failed to maintain an active policy, you are looking at personal liability for the full medical bills. And on top of that, you're going to be hit with devastating non-compliance penalties from the state labor board, which usually show up as compounding daily fines. It's a complete financial nightmare that can destroy a new business before it even really gets off the ground.
But don't panic, because we are heading into Section 3, avoiding the audit trap.
To completely bypass that whole traditional insurance headache, savvy modern operators use a much better method. The old way relies on writing these massive upfront deposit checks based on estimated yearly payroll figures, which is basically just guessing. But the modern LizBiz Academy preferred solution is pay-as-you-go workers' comp. This digital mechanism integrates directly with your automated payroll software to give you absolute down-to-the-penny precision.
Now, before we break down how the actual payments work, you kind of need to understand how the costs are determined in the first place. Your premium rates are strictly calculated by your specific industry classification codes. Think about it. A roofer is obviously going to have a very different rate than a clerical office worker because the risk of injury is fundamentally different, right? Your payroll software uses these codes to know exactly what rate applies to each individual employee.
You know, subjecting your business to a terrifying year-end audit bill is officially a thing of the past. I absolutely love that fact because it hits the nail on the head regarding the biggest flaw of the old system. Under that old upfront estimate model, if you ended up hiring more people than you originally guessed, the insurance company would literally slap you with a massive, unexpected audit bill at the end of the year to make up the difference. But with modern automation, we eliminate that entirely.
Which brings us to Section 4, Pay-as-you-go automation integration. All right, here is the step-by-step framework for how this digital mechanism actually works. Step 1. Every single time you run a payroll cycle, the software calculates your exact premium based on the real-time wages you are paying that very day. Step 2.
It deducts a tiny, precise micro amount per check to cover the premium instantly, so no massive upfront deposits required. And step 3, it automatically builds an absolutely bulletproof audit trail, defending your worker classifications without you having to manually log a single thing.
So, look at what you've mastered today. You are walking away with a brand new LizBiz Academy Knowledge Toolbox. You now understand the headcount trigger map, making sure you have a strategic grasp of your local state guidelines for day one compliance. You've got the pay-as-you-go mechanism, which is your framework to link premiums directly to real-time payroll. And you have the Audit Protection Trail, a streamlined method to automatically log and defend those classifications. You've officially leveled up from a solo operator to a fully compliant boss.
Now, if you need some help applying these concepts, don't worry, we've got you covered. Check the link in the description to book your free LizBiz Academy video call today. Our team will literally sit down with you, map out your specific state compliance numbers, and help link up your workers' comp policy so you get it done exactly right the first time. I want to leave you with this final thought as we wrap up this explainer. Take a hard look at your current setup and ask yourself, are your payroll runs secretly building a devastating year-end audit trap, or are they automatically constructing a bulletproof legal shield? The choice and the technology to actually make it happen is entirely in your hands. Thank you so much for joining me for this LizBiz Academy lesson, and definitely stay tuned for our next explainer where we are going to tackle the W-2 versus 1099 classification trap. See you then.